What if I told you the government is literally giving away thousands of dollars every single year, and most beginners never claim it? Not because it's illegal, not because it's complicated, but because nobody ever taught them how. By the end of this video, you'll know exactly how to keep more of your money, legally, ethically, and starting with your very next paycheck. Hey everyone, welcome back. If you're new here, I break down money, taxes, and wealth building in the simplest way possible, no boring jargon, no confusing spreadsheets. Today we're talking about something that scares a lot of beginners: taxes. But here's the truth. Taxes aren't your enemy. Not understanding them is. So in this video, I'm going to walk you through 6 simple, beginner-friendly tax-saving tips that could save you hundreds, maybe even thousands of dollars this year alone. Stick around till the end, because tip number 5 is something 90% of beginners completely ignore. Let's get into it. Look, nobody teaches us this stuff in school. Not taxes, not saving, not how to actually keep more of what we earn. That's exactly why I make these videos, to break down the money lessons you should have learned years ago, in a way that actually makes sense. If this helped you see taxes a little differently today, do yourself a favor, hit subscribe, because next week I'm breaking down an even bigger money mistake beginners make, and trust me, you don't want to miss it. I'll see you in the next one. Let me ask you something. Do you actually know how much of your paycheck goes to taxes, or are you just guessing? Because here's the wild part. Most beginners have no idea what tax bracket they're actually in, and that one gap in knowledge alone causes them to make decisions that cost them money every single year. So let's fix that right now, in the simplest way possible. Think of your income like layers of a cake. Each layer gets taxed at a different rate, not your entire income at one flat rate, like most people assume. This is called a progressive tax system, and honestly, once you understand it, taxes stop feeling like some scary mystery and start feeling like math you can actually control. Here's where beginners get confused. Let's say you move into a higher tax bracket this year because you got a raise or picked up a side hustle. A lot of people panic and think, "What, does this mean my income gets taxed more now?" No, only the portion of income that falls into that new bracket gets taxed at the higher rate. Everything below it stays exactly the same. That's a huge relief once it clicks. Now, why does this matter for saving money? Because once you know your bracket, you can actually plan around it. For example, if you're sitting close to the edge of a higher bracket, you might choose to increase your retirement contributions before year end. Why? Because those contributions can lower your taxable income, potentially keeping more of your money in a lower bracket. That's not a loophole, that's just smart, informed planning. Let's make this real. Imagine 2 people earning the exact same income. One understands their bracket and makes small, strategic adjustments, timing certain expenses, maximizing deductions, contributing to the right accounts. The other has no idea what bracket they're in and just files whatever their software tells them to. Guess who ends up keeping more of their hard-earned money at the end of the year? It's not about earning more. It's about understanding what you already have. This is exactly why financial literacy matters so much. It's not about becoming a tax expert overnight. It's about knowing enough to ask the right questions to your employer, your tax preparer, or even yourself before making big financial decisions. So here's your action step before you do anything else on this list. Take 5 minutes and actually look up your current tax bracket. Not to stress about it, just to know it. Because once you understand where you stand, every other tax-saving strategy is going to make a lot more sense. And trust me, this is just the foundation. What comes next builds directly on this, and so stick with me. Quick question, what if I told you there's a way to save for your future and lower your tax bill in the exact same move? Sounds almost too good to be true, right? But this is one of the most legitimate, beginner-friendly strategies out there, and barely anyone explains it in a way that actually makes sense. So let's change that. Here's the basic idea. When you contribute to certain retirement accounts, that money often gets deducted from your taxable income before taxes are calculated. In simple terms, the government isn't taxing every single dollar you earn if some of it goes straight into your future. It's like telling the taxman, "Hey, this portion isn't available right now. It's locked away for later." And because of that, your taxable income drops, which can lower the amount you owe. Let's make this practical. Imagine you earn a certain income this year, and you decide to contribute a portion of it into a retirement account instead of spending it immediately. That contributed amount typically doesn't count as taxable income for that year. So not only are you building a cushion for your future self, but you're also potentially reducing what you owe right now. 2 wins from a single decision. And that's exactly why this strategy is so powerful for beginners. Now here's where it gets even more interesting. A lot of people think retirement savings is something you deal with later, like it's a future me problem. But the earlier you start, the more time your money has to grow. Think of it like planting a tree. The best time to plant it was years ago. The second best time? Right now. Even small, consistent contributions can build meaningful momentum over time. Not because of luck, but because of consistency and time working together. Let's talk about a real-life scenario. Say someone starts contributing a small percentage of their paycheck the moment they start working. Even if it feels like a tiny amount. Compare that to someone who waits 5 or 10 years to start when they have more money. The first person isn't just saving more. They're giving their money more time to potentially grow, while also lowering their taxable income year after year. That gap widens over time, not because one person is smarter, but because one person started earlier. Here's the beautiful part. This isn't about being wealthy or having some special financial knowledge. It's about understanding that your future and your taxes are more connected than most beginners realize. Every contribution isn't just a deposit. It's a decision that works for you today and tomorrow. So if you haven't already, this is your sign to look into what retirement options are available to you, through your employer or on your own, and start contributing even if it's small. Because in the world of taxes and money, starting early beats starting big. And that mindset alone can completely change your financial future. Here's a question that might sting a little. How much money have you already lost this year simply because you didn't write something down? I know that sounds strange, but stay with me, because this is one of the most overlooked tax-saving opportunities for beginners and it's costing people more than they realize. Let's start with the basics. A deductible expense is essentially money you spend that the tax system allows you to subtract from your taxable income. In plain terms, certain costs you already pay in daily life might reduce what you owe, but only if you actually track and claim them. And here's the catch. If you don't have a record, you can't claim it. No proof, no deduction. That's it. This is exactly where most beginners lose out. Not because they're doing anything wrong, but because they simply aren't paying attention. They spend money throughout the year, never save a receipt, never track anything, and then tax season rolls around and they're left thinking, I probably could have saved more, but I have no idea what I actually spent. Let's bring this into real life. Imagine someone who works from home part of the year. Certain home office costs, depending on their situation, might be deductible. Or think about someone paying for continuing education to improve their skills for work. Those costs could potentially count too. Even certain medical expenses, depending on the circumstances, might qualify. The point isn't that everyone qualifies for everything. The point is that most beginners never even check because they never tracked anything in the first place. Here's a simple way to think about it. Imagine going through an entire year collecting coins in your pocket, but at the end of the year, you just throw them away without counting them. That's essentially what happens when people don't track deductible expenses. They had value sitting right there the whole time, they just never gathered it up. So what should you actually do? Start simple. Keep a dedicated folder, physical or digital, for anything that might be tax-related throughout the year. Save receipts. Take photos of them if you have to. Keep a basic spreadsheet or even just a notes app where you jot down what you spent and why. This isn't about becoming an accountant overnight. It's about creating a habit of awareness so that when tax season comes, you're not scrambling to remember months of expenses from memory. The truth is, most beginners aren't losing money because of one big mistake. It's the accumulation of small, untracked expenses throughout the year. And once you start paying attention, you'll be surprised how much you were potentially eligible to claim all along. So here's your challenge. Starting today, begin tracking. Not because you're trying to find loopholes, but because you're finally paying attention to money that was already yours to claim. And once you build this habit, tax season stops feeling stressful and starts feeling like something you're actually prepared for. Let me ask you something most beginners never stop to think about. What if the account you're already saving in could also be quietly lowering your tax bill without you having to do anything risky or complicated? That's not a hypothetical. That's exactly what tax-advantaged accounts are designed to do. And yet, so many people walk right past them simply because nobody ever broke it down in plain language. So let's break it down. A tax-advantaged account is basically a special type of savings account that comes with built-in tax benefits as long as you use it the way it's intended. Depending on the type of account, that benefit might come in the form of tax-deductible contributions, tax-free growth, or tax-free withdrawals for specific purposes. The exact rules vary depending on the account and your personal situation, but the core idea stays the same. These accounts are built to reward you for saving with a purpose. Let's make this real with an example. Think about a health savings account, often used alongside certain health insurance plans. Money placed into an account like this may reduce your taxable income, and depending on how it's used, withdrawals for qualified medical expenses may not be taxed either. That means the money you're already likely to spend on healthcare could be working in your favor from a tax perspective, instead of just disappearing from your paycheck with no benefit attached. Or think about education savings accounts, designed to help with future schooling costs, whether that's for yourself, your child, or someone you're supporting. Contributions might grow over time, and depending on the account and how the funds are used, that growth could come with tax advantages as well. Here's the mindset shift I want you to walk away with. A lot of beginners treat savings accounts like they're all the same, just a place to dump money and hope it's enough later. But not all accounts are created equal. Some are specifically structured by the tax system to encourage responsible, long-term financial habits. And if you're not using them, you might be leaving real advantages on the table. Let's use a simple comparison. Imagine two people saving the exact same amount of money every month. One puts it into a regular account with no special tax treatment. The other strategically places a portion into a tax-advantaged account suited to their situation. Over time, depending on their circumstances, the second person could end up in a noticeably better position, not because they saved more, but because they saved smarter. This is why understanding your options matters so much. You don't need to be wealthy to benefit from these accounts. You just need to know they exist, understand what you personally qualify for, and take a few minutes to explore whether one fits your life right now. So here's your takeaway. Before your next paycheck hits, take a moment to research what tax-advantaged accounts you may have access to. Because sometimes, the smartest money move isn't earning more. It's simply placing the money you already have in the right place. Alright, I told you earlier this one was coming, and I meant it. If you've watched this far, this might genuinely be the single most misunderstood concept in this entire video. And once it clicks, you're going to look at your taxes completely differently. So let's clear something up first, because this is where most beginners get confused. A tax credit and a tax deduction are not the same thing, even though people use those words like they're interchangeable. A deduction lowers the amount of income that gets taxed. A credit, on the other hand, reduces your actual tax bill directly, dollar for dollar. Let that sink in for a second. If a deduction is like getting a discount before checkout, a credit is like someone walking up to the register and paying part of your bill for you, after everything's already been calculated. That's a completely different level of impact. Here's why this matters so much for beginners specifically. Deductions are useful, no doubt, but their value depends on your tax bracket. Credits don't work that way. A credit worth a certain number of dollars reduces your tax bill by that same number of dollars, regardless of what bracket you're in. That's what makes credits so powerful, and exactly why overlooking them is such a costly mistake. Let's paint a picture. Imagine two people who both qualify for a specific credit related to their life situation, maybe something tied to education, dependence, or certain living expenses, depending on what applies to them individually. One person knows about it, researches it, and claims it properly. The other has no idea it exists, files their taxes quickly, and moves on with their life. Same income, same situation, completely different outcome, simply because one person knew where to look and the other didn't. This is exactly why financial awareness matters more than financial complexity. You don't need an advanced degree to benefit from credits. You need curiosity. You need to actually ask, what am I eligible for? Instead of assuming your tax software or preparer will automatically catch everything without you double-checking. Here's a mindset shift worth remembering. Many beginners spend so much energy trying to earn more money, while completely ignoring the money they're already entitled to keep, simply sitting there unclaimed because of a lack of awareness. That's not about working harder. That's about paying attention. So here's your action step. And I want you to actually do this, not just nod along. Before you file your next tax return, take time to research which credits you may personally qualify for based on your unique situation. Ask questions, look deeper. Don't assume nothing applies to you just because nobody ever told you it did. Because here's the truth most people never hear. The tax system isn't only built to take from you. In certain situations, it's also built to give back. And once you understand that difference, you stop fearing tax season and you start approaching it with confidence. Let me ask you one last question before we wrap this up. Have you ever waited until the very last moment to do something important, only to rush through it and make a mistake you could have easily avoided? Now imagine doing that with your taxes. That's exactly what happens to so many beginners every single year, and it's often the final reason they end up leaving money on the table. Here's the thing nobody really explains clearly. Filing your taxes isn't just a task you check off a list. It's actually a process, one that rewards patience and punishes rushing. And when you wait until the deadline is staring you in the face, you're not thinking clearly. You're just trying to get it done and move on. Let's think about this like packing for an important trip. If you start packing weeks in advance, you carefully think through what you actually need, you double-check things, you make thoughtful choices. But if you wait until an hour before you leave, you're just throwing random things into a bag, hoping you didn't forget something important. Filing taxes works the exact same way. When you rush, you don't have time to review deductions, double-check credits, or make sure everything is accurate. You just want it done. Here's a real-life scenario. Imagine two people with almost identical financial situations. One starts organizing their documents early, reviews what they might qualify for, maybe even asks a few questions along the way. The other waits until the deadline, files quickly out of stress, and doesn't take time to review anything carefully. Even if their numbers are similar on paper, the outcome can look very different. Not because one person earned more, but because one person gave themselves the time to be thoughtful, and the other didn't. Filing early also gives you something incredibly valuable that most people overlook: time to fix mistakes. If something looks off, if a number doesn't add up, if you're missing a document, early filers have room to correct it. Last-minute filers often don't. And in the world of taxes, small oversights can lead to bigger headaches down the road. There's also a mental side to this that beginners underestimate. Waiting until the last moment creates stress, and stress leads to rushed decisions. But when you file early, you're not just being organized, you're actually giving yourself the mental space to make smarter, calmer financial choices. So here's your final action step for this video. Don't wait until the deadline feels close. Start early. Gather your documents ahead of time. Take a little time to actually understand what you're filing, instead of just clicking through as fast as possible. Because at the end of the day, filing smart isn't about doing something complicated. It's about giving yourself enough time to do something simple, correctly. And that one shift alone can make this entire process feel less stressful and far more in your control. Listen, nobody becomes financially smart overnight. But every single person watching this right now has just taken a real step forward. You now know more about taxes than you did 10 minutes ago, and that knowledge, that's power you get to use starting today. So don't just watch this and forget it. Apply it. Because the people who win with money aren't the ones who know the most. They're the ones who actually take action. Your future self is watching this moment. Make it count.